Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the best trading indicator for the Renko charts. The Renko charts are powerful tools for identifying trends and filtering out market noise, but when combined with the right indicators, they become even more effective. So we are going to explore how these indicators can be enhanced using the Renko chart analysis to potentially improve your trading results. So by the end of this video, we will have a clear understanding of which indicator works best with the Renko chart and how to implement them in our trading strategy. So stay tuned to learn how to leverage these powerful tools and take your Renko chart trading to the next level. Now, the best indicators we can use for our Renko charts are, the first one is our moving averages. Our moving average are versatile indicators that smoothen out price data to create a single flowing line. They work exceptionally well with the Renko chart due to the ability to highlight trends and filter out noises. The moving average calculates the average price over a specific number of periods, with the exponential moving average, which is the EMA, giving more weight to recent price when applied to the Renko chart. The moving average provides a clear trend signal and acts as a dynamic support and resistance level, enhancing the chart's ability to identify specific price movements. Now for the EMA, for the short-term EMA, this is how we apply. You apply for the short-term EMA, you apply the 9 moving average and the 12 moving average for the EMA to your Renko chart. Then for a longer term trading, you will then apply your simple moving average for a longer term trading style, which is the 20 period moving average and the 50 period simple moving average. Now you will use the crossovers to confirm the trend direction. You look for when price crosses above or below the moving average to determine the sentiment in the market. So when price is constantly below the moving average, it signifies downtrend. When price is constantly above the moving average, it signifies a buy trade. You have to consider using these moving averages as potential entries and exit points with their crossovers to the upside or to the downside. This is how we make use of the simple moving average and the exponential moving average when trading with your Renko chart. Now the next indicator we make use of is the RSI, the relative strength index. When you combine your RSI indicator with your Renko chart, since the RSI indicator is a momentum oscillator that measures the speed and change of price movement. When combined with the Renko chart, the RSI becomes a powerful tool for identifying overbought and oversold conditions, as well as potential trend reversals. The RSI ability to show momentum divergence complements the trend following nature of the Renko chart, providing traders with additional insights in the potential price reversal. So by adding your RSI to your chart, you use a default setting of 14 period setting. This is the RSI length of 14. This is what you use for your RSI. Then you use the 50 level. You use this 50 level on the RSI as a midway point to gauge the market sentiment, in the sense of when price is above the 50 level, we are in a buy trade. When price is below, we are in a down trend. You look for the RSI readings above 70 for an overbought condition. When price is above 70, signals overbought, showing fully well that price will soon trade to the downside. When price is at the overbought region, we are going to be expecting a reversal to the downside. Then when price is below 30, this signals an oversold region, saying that price might reverse to the upside any moment in time. We can also make use of the RSI divergence with the Renko bricks to spot potential reversals. This is how we can spot reversals. As we can see in this area in charts, the Renko chart created a lower low. But if I see my RSI indicator, I can see a higher low. This indicates a bullish reversal. Then a bearish reversal, you see a higher high in price and the RSI indicator will make a higher low. This is where you see divergence. Once you spot divergence within the RSI and the Renko chart, this signifies a trend reversal. Now we have to combine the RSI reading with the Renko bricks color for confirmation when trying to enter your trade. Remember, when price is constantly above the 50 region and you see 1 or 2, 3 to 2 candles in one direction, this is a signal for higher prices. But when price is constantly below your 50 and you can count 2 or 3 candles in the same direction, you can count 2 or 3 prices in the same direction. So when you notice the Renko chart forms at least 3 consecutive red candles and the Renko chart, and from your RSI you can see is at the overbought region trading downwards, this signals your sell trade. This is how you can combine your Renko chart with your RSI indicator for trading opportunities. Now the last indicator that we can use and combine with our Renko chart is called the Bollinger Band. The Bollinger Band is created by John Bollinger and is a volatility-based indicator that consists of 3 lines. The middle band is typically a 20-period moving average, while the upper band and the lower band are 2 standard deviations away from the middle band. These bands expand and contrast based on market volatility, making them particularly effective when used with the Renko chart. The Bollinger Band helps traders to identify potential breakouts and measure volatility and spot possible trend reversals. Complementing the Renko chart, the ability to filter out market noise and highlight significant market movement. So how do we use the Bollinger Band with the Renko chart? You start by applying the Bollinger Band to your Renko chart. You set it at a length of 20 and a standard deviation of 2. This is the setting of your Bollinger Band with your Renko chart. You look for the Renko bricks closing outside the band of the potential signal. When the Renko bricks close outside the signal, you have to consider adjusting your standard deviation for more sensitive signals. Now, when we notice our Renko chart getting to the external walls of the Bollinger Band, this can signal a selling opportunity, and as we can see, you would further confirm this by when you see 3 consecutive candles. This can signal that price is ready to reverse from the upper band area. You take your trade at that area and you place your stop loss just above the high, and you aim for your 1:2 or 1:3, or you aim for at least the lower band of the Bollinger Band. Then for a buy trade, when price gets to the lower band and you see a consecutive 3 green candles in your direction, this is where you would want to enter a long position, and you put your stop loss just below the lower end of the band, and you aim for at least a risk to reward of 1:2 or 1:3, as the case may be. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in